Inversions, the aftermath. Does that
Yes.
sound ominous? Or are you scared of what happens after a yield curve inversion?
I was for a little bit, but I feel like we're coming back to greener pastures, and this is kind of why these things are important to understand. I'm new to yield curve trading, but I have quickly realized that these are some really nice opportunities when it does happen. Especially if you're flat and you don't have a position on yet.
I like that you alluded to like being kind of scared or worried when the yield curve inversion is happening, which everyone feels that. Like interest rates, why do I kind of go to the mat for interest rates is because they are some of the best mean reverting assets out of everything you can trade. Equities, crude oil, gold, everything. Interest rates mean revert better than any other asset class. But that being said, we're human. And so when we're at an extreme, either in an outright market or the spread market that we're looking at here, I mean, remember you and I would talk when the S2Y, the 2-year, was at zero and short-term rates were at 0%. And we're like, man, this is a great extreme to buy because I'm leaning up against this market going negative in interest rates. That's my downside, or getting back to 1% or 2%. Obviously, we were right on that one. But at the time, you still have this in your mind, Mikey, where it's like, but it could go negative. Like it could go negative in there. And the same goes with this spread where it's like the yield curve goes inverted last week. And it's like, all right, well, I am going anti-inversion. I'm going to be buying 10-year yields and selling 2-year yields. And when it's happening, you're still like, oh man, it could go more inverted, even though I'm on the right side of things. It happens, right?
Yeah. And that's why you need to be able to withstand that variance and trade. Like, even though we know that it's a rare occurrence, you can't just go nuts and expect that it doesn't. It's like the first thing that comes to mind is like oil going negative. Like nobody thought, I don't think anybody prepared for that, but it still happened for supply and demand reasons. So just keep in mind that these things can go inverted. They can go super inverted. But you got to trade small enough to where you can withstand it if you're going to trade it.
Great point. Because, and that crude oil is a great example, because if you were trading the traditional futures, that every dollar in crude is $1,000, even if you bought negative crude, and obviously, you know, now crude oil is dancing around $100 a barrel. If you bought it, Mikey, at $10 or even zero, it got all the way to negative by $40. I mean, and it was only that in a flash. So let's be more realistic. It was negative by maybe $5 to $10. If I bought even at zero, that's $5,000 to $10,000 in losses that I might need to get rid of that position before it comes back. So thankfully, yeah, we have the small exchange products that are smaller, and you have to stay small. Even though if you're on the right side of an extreme in a market that mean reverts, you have to be able to withhold that. So yeah, we've talked a lot about the inversion. If you want to go see how you can trade it, you can look at the archived segments of this show. But I want to talk a little bit about what might happen next. Now, of course, we can get back to an inversion. I don't know. I would say the odds are probably 50-50, a little close to that of the yield curve going back to inverted. We went there for a flash, and now we're back to a normal environment, but we're still so close that like we might dance around there in the short term. In the long term, obviously, I think that we'll, you know, maintain a normal yield curve environment. But what's interesting here, I looked back at the 3 prior yield curve inversions, all inversions that we've seen since the year 2000. And each of them, you see this gray line here, which is the 2-year yield absolutely collapsing after the inversion. Now, 10-year yields in black there do see some downside, but 3 times out of 3 here after the inversions, Mikey, you're seeing that 2-year really fall off the map in the coming months after an inversion.
Yeah. And it's always good to see historical data to where like when this goes inverted, eventually it has come out of it, just like volatility futures. When we go into backwardation, eventually we'll go back to contango. It's not a sustainable situation, at least for volatility futures. So yeah, I think it's a great way to, if you're patient enough and you can wait for these potential opportunities that don't come around every so often, like this is a very high probability trade, even though right now we have different ratios. I'm taking some heat on this, but I'm willing to hold through it and see if we get this collapse in the 2-year.
Yeah. And another apt analogy with that volatility, where it's like when volatility, option volatility, that is S&P 500 volatility spikes, a lot of people, come out on Twitter or news media websites will come out and be like, oh, like now that volatility has spiked, now there's fear in the market. Fear is going to go crazy, blah, blah, blah. It takes a special kind of person to jump on the other side of this stuff. And it might not feel great in the moment, but I mean, it's hard to argue with volatility reverting back to that average. It has every single time we've seen a volatility spike, the market has come back there. Same with these inversions and how you've seen the interest rate markets operate afterwards. Interesting thing here in stocks. And I want to know what you think about something like this, because I love the data. And once again, we have 3 for 3 after an inversion. You've seen the stock market crash every single time here. In 2000, it was the dot-com crash. 07, 08, inversion right before that, financial crash. And then in 2020, kind of, I don't know if there's as much of a correlation, but we went inverted. And then in 6 months after that, we have this pandemic crash. How do you take information like this, where it's 100%, 3 inversions, 3 stock market crashes, but are you necessarily betting on crash, getting short every equity, or how do you take some information like this?
So it's really interesting to see this because I feel like we are in a unique scenario where we've seen volatility futures go into backwardation. We were getting 200 point, 150 point rallies and sell-offs. And then we saw volatility just get crushed. And we're currently in a pretty decent contango, which normally would mean that the market is projecting somewhat of a more stable environment going forward. Mm-hmm. That can always change, but that can change quickly. And just because we're in contango now doesn't mean we won't be in backwardation after this week. So I think with this information at hand, sure, if you have some equities that you want to try and get long, if you're going to kind of fade this information, or you think maybe it's already come into fruition with the sell-off we've seen in the beginning of the year, that could also be an assumption. I think at the end of the day, it's always just you need to be able to withstand this variance. If you get in a position, if you're uncomfortable with undefined risk, make it defined risk. If you have undefined risk, be able to manage it indefinitely. I think that's the best way to approach short premium trading, or at least with a stop in mind if you're not doing that. But yeah, I think it's very interesting, and it will be very interesting to see if this happens for a 4th time.
Yeah, it's one of those things where like 3 for 3 on both interest rates collapsing and stocks collapsing after an inversion. What happens next? You like to, even though we are such probability-based people, you still like to operate with the idea of like anything can happen. So if I do take this information, Mikey, and maybe I do have, short 2 years on, I'm not going to go crazy with it. Like you say, I'll have some on, and maybe I'll under hedge it with some long 10 years to, bet on the side of history, but not go crazy. Same with equities. Maybe I see this information and I've got a portfolio that's 100% long equities, and I peel off some of that, or I sell some calls or something like that. Or I'm, neutral. Maybe I put on some bearish, I sell some call spreads or some calls, some slightly bearish positions, but not necessarily go nuts. Because I think in the long term, this data tells me that, one, the yield curve inversion doesn't tend to stick around. So it's likely that we see this spread bounce back in the long term. Who knows in the short term? 2, interest rates can't sustain this upward trajectory, so they are likely to come off at some point, move lower. And 3, stocks do tend to see some downside after these events, but those are all kind of longer term trends. In the short term, just make sure that you're small and nimble, ducking in and out of positions, because I know I have with not only the spreads, but equities and everything else, putting some stuff on, taking some profits, hedging some stuff and everything else. And that's your aftermath on yield curve inversions. Well, Mikey B, thanks so much for joining me on Mikey Mondays. So good to have you. As always, I hope more profits for you in the coming golf season. Is that one of your favorite sports to bet or what?
Oh, 100%. I think it's the best sweat ever just because you've got Thursday, Friday, then you've got the cut. And especially in daily fantasy, if all your guys make the cut, you're a part of only like 5% of the pool where that happens, and you're going to make money. It's just a matter of how much. So I think that's the most exciting part of daily fantasy. But like you said, the odds are always going to be pretty high with golfers. So if you pick 5 or 6 and they're all in the running come Sunday, you can be feeling pretty good with a nice payout.
Absolutely, man. I totally agree with everything you said there. So everybody look for first. That's just the first one. We got like 3 or 4 more big tournaments to come here in the summer. Thanks so much, Mikey, for joining us. Make sure you check out his other programs on the network and follow him on Twitter and everything else. That'll do it for Small Stakes today. Thanks everybody for watching. Stick around for Splash in the Futures coming up next with Pete Molmet. You're going to want to watch it. Peace.